And then the other thing we did was we combined sharing with a health savings account. And what a health savings account is tax time now. Your CPA is going to ask if you've maxed out your HSA. What that means is financial planners characterize the HSA as the best savings vehicle out there because it has triple tax benefits. Anything you put in there up to, $3,000 individual, $7,000 family is pre-tax. So it's a tax shelter. That shrinks your taxable income. Any interest your bank pays on the HSA is tax-free. Because over 30 years, if you can max out $7,000 a year and then invest those balances, you can have $100,000 plus at retirement, which is what you'll need because the out-of-pocket risk really is when you're old. It's long-term care. It's that skilled nursing care that you'll need because we're living longer. You're going to need 100, 200 grand in care. I really sell to people who understand there's no reason to get insurance if you can have the same protection for half the price. That's sharing versus insurance. And you really need to have an HSA to really build that nest egg for retirement. Now, I will combine that with a second account for current out-of-pocket called a health matching account. Say you pay $140 a month if you want to have 10 grand for your out of pocket if you're going to have a baby, braces, an elective surgery, you're facing some big gaps with Medicare when you're old. I have 11 different levels from $2,500 up to $60,000. This account is a calculus based on what your expected out of pocket is. If you really want to have protection for $10,000 in out of pocket, that's $140 a month. So let's look at that example in month one, 140. I'll be quick about this. That's what you're going to pay for 3 years. 3 times 12 months is 1,680, but your balance is higher. They use crediting based on actuarial science to keep crediting your account so it grows faster and faster within this 35-month, 3-year window. After 2 years, month 24, you've put in 3,360. The value is now 5,400. After 3 years, you've spent about $5,000 at $140 a month, but your balance is double that. I'm going to give you an HSA so you can get that nest egg for retirement. Remember, if you have 100 grand in an HSA retirement, you can use that for non-health expenses.
I was going to ask that. Okay, so that's after a certain age you can do that?
Yep, no penalty.
Okay.
A new boat, retirement home.